Well, good morning, everybody. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I'm a coach and senior manager with Charles Schwab. And this is our active trading class or an active trading class. So in this class, we place lots of trades and we follow up on trades. So I know that many of the people that come to this don't necessarily have a small account, but you may have a large account, the majority of which is invested in longer term positions. And maybe you want to take a piece of that and actively trade it to say, grow it, or this year our goal is to generate some income. And how much income? Our goal is to on average generate $200 a week. We started with $100 a week and we've kind of upped our game because we're overachievers in this class. So today we're going to talk about what to do when the market is close to all-time highs, but kind of busy going a whole lot of nowhere, which is what we've seen kind of over the last couple of weeks, and what type of trading strategy might work well for that. Okay, so that's going to be our topic for today. If you are not following Scott and I in the land of X, I've got Scott Thompson with us in the chat. He's a friend, he's a fellow coach. He was one of the people that I followed when I got introduced to the world of trading as a client. I don't know if most of you probably know my story. I was in other businesses and then started actively trading and then became a coach. So I started as a client. Yeah. So anyway, if you aren't following us on X, you're missing out at Barb Armstrong CS and at Scott Thompson CS. You can also now find us on LinkedIn, and in the show notes down below, you'll see a link on how to find us there as well. So just before we get started, because as usual, I always have about 10 pounds worth of stuff I want to, fit into a 5-pound bag, or an hour and a half worth of content I want to put into our 45 minutes together. But just a reminder that options carry a high level of risk and aren't suitable for all investors. We use the Paper Money software application on the Thinkorswim desktop platform, which is a brilliant place to learn and hone your skills. Make sure you have a trading plan, understand it, understand the mechanics of how to place trades on the platform before you go to your live account. There are some nuances and differences. One is that short positions will never be assigned early. Also know that if you use a stop loss order, that isn't a guarantee that you're going to get out at the price you requested. Now, if you've never been to a live event, this is how I got introduced to this wonderful world of trading back in 2011, so 15 years ago now. But I would highly recommend them. I mean, it was a chance for me to link arms with others who were committed to figuring this out. And I met lots of great people there. And at the time I got introduced to this, like I had a house full of teenagers. It was pretty chaotic. And so it was very cool. I'd get on a plane and fly to DC or come to Salt Lake City. I was living in Michigan at the time, and just have 2 days where I could just totally focus on this topic. So the next one up is Scottsdale. I will be there, I'd say with bells on. I may not actually be wearing bells, but it's a fantastic event. And we go from what's happening globally in the world and how is that impacting stock markets, tariff discussions, right down to here's an individual stock and here's how a trader might consider trading that, doing some example trades, not recommendations, just examples of how we can look at the market. And then the next event is a 2-day event. First day is intro to technical analysis, and then an introduction to options. And then we're going to do the same thing again in Miami. I'll be at the next 2 events. So if you're there, come up and introduce yourself. I'd love to get to meet you in person. Maybe we can take a picture together or whatever. I do a very small, coming back to this class, we do a very small market overview because Kevin Horner just did a fantastic one at the market open at 9:30 Eastern. We'll place some new example trades, and then we're going to do a little bit of trade management today also. So there we go. That's what's on the menu. Now, if you're new to this, first of all, feel free to type a greeting into the chat so we can welcome you. I've seen some new handles here today. Unexpected good luck. Welcome to the group, and Randall, Brad, and then a lot of, as I affectionately call you, the usual suspects. To CB and Abundant and Jana and Tom and Josh and Cecil and Marcus and Life in the Fast Lane and the rest of the gang, and Will from Texas. I'm so glad you guys are all here, and thank you for helping bring so much positive energy to this class. We started the year with a $25,000 paper money account. Our max position size is 5,000, and some of you may be kind of saying, well, back the truck up. That's 20% of our starting account value. If you had $1 million account, you wouldn't do a 20% position. Chances are, you might say, well, I don't want my position size to be more than 5%, which is totally fine. But we wanted to be able to do stock positions and buy right covered calls, and so we made that 5,000. Now the majority of our account tends to be sitting in cash, most of the time, but we bought some positions over the last week, so we'll see where we stand. And our max risk per trade at $500 represents 2% per trade for risk. Now, again, if you had $1 million account, you might say, well, I only want to risk a half of 1% or a third of 1%, whatever that is. And we're not, our focus in this class isn't on longer term investments. We're in the moving business, not the storage business, to steal a line from my friend Kevin Hanks. We're focused more on the intermediate term time frame. And because the market has been so bullish lately, we've been doing more bullish trades than bearish trades. But about 3 or 4 years ago, when the market was tanking, almost all of our trades were bearish. So we just kind of go with the flow of what's currently happening in the market. Okay, so let's get out to our Thinkorswim platform. Here's the NASDAQ. And it's up 16% year to date. I mean, over the last 30 years, it's averaged about, 13%. But if we come back here and show price as a percentage, and we look at the last year, even with, it's up 26% in the last 12 months, which is really still pretty bullish, even though we've seen this period of consolidation. And some might say, like, if I'm playing I Spy with My Little Eye, which is one of our favorite technical analysis games, could this be setting up kind of a bit of an inverted Head and Shoulders? And it could be, but it's not complete. And this is just a consolidation pattern, but we're still not at the breakout point on that, and it may not come. We may end up, with it coming back down here to around this 27.2 level. We'll just have to wait and see. And one of the things, like, we're very tempted to trade what we think. And in this class, we try and trade what we see. And there is a difference. Okay. Somebody's asking about upcoming events. And so if you want to see upcoming events, let me just pause for a wee commercial break there. If you go to schwab.com/coaching, okay, and when this comes up, what you'll see is I don't want Meet the Coaches, I want the in-person events. Here's what's coming up. And we have everything posted, even though you can't register for everything yet. So we'll be after Miami, we'll be in Chicago and then Honolulu. I'll be at those events. Then we'll be Anaheim and New York. And then the first event in January is Dallas, January 8th and 9th. Okay. And then San Diego. Okay. But this is where you go. And I always put a link to that in the show notes. So if you're watching this in the recording, that's where we go for that. Okay, so back to our regular program. So the NASDAQ, we're seeing a bit of consolidation, but we're still not far off all-time highs. And when you see, an index up 26% in a year, it's hard to call it anything other than, bullish from an intermediate term perspective. Now, this looks a little more even in the short term bullish. Some might say this is a bit of a bull flag and a stiff wind, or it came up and hit a new all-time high here back in August. We're still up about 19.5% in the last 12 months, which, not too shabby. And we're just seeing it kind of consolidating and going a little bit sideways here. And some might say because we had a gap up here on the 4th of August, and it's come back down to test this, and this 76.35 seems to be holding as a support level. If we look at our small caps, again, up 25% in the last 12 months, up 18, almost 19% year to date. And it's been down the last 2 days, but we're still seeing higher lows, higher highs. In fact, we just hit a new all-time high here on the 14th. So, Chicken Little is not out running around the yard doing laps. She's not even warming up. And I call her a she just because, I hate to generalize, but women tend to embrace the drama, right? So, and here's our Dow, kind of similar looking to the SPX, up 17% in the last year. So a little more modest than the other two. But, it too hitting a new all-time high back on the 5th. So all of these indexes hitting new all-time highs in the month of August. Now, when we look at our VIX, it's up 5% today. So we've had a little bit of a bump. Still low, in the low end of the range of where it's been trading for the last year. And, that's okay. But, maybe if we're looking at our trades and we see from where they were on Friday, especially if they're positions we've sold, like a short put vertical, they may be taking a little bit of a hit today, because when volatility goes up, premiums go up, and we're looking to take advantage of time decay. So this leads me to our trade management. And we're not going to spend a lot of time on this, but as you can see, and today we're going to look at our long call verticals and short put verticals. So we're seeing a lot of red over here. So if you're saying, wow, like, have we really messed up? Well, I covered a class for Brent Moores a week or two ago, and it was called Managing an Options Portfolio. And the class I called Steps to Making Trade Management Easier. And the analogy I used was kind of like, if you clean out your closet every day, when you open that closet door, it makes your heart sing a little bit. And so we just kind of cleaned out our closets a bit with respect to the way we've organized our watch lists and our monitor tab. And so we created some watch lists, one for our short put verticals. And I started them all with so that they would be close to, together on this, my personal list. So when we place a short put vertical trade, we now have a list here of all our trades, and there's 1, 2, 3, 4, 5, 6. We've got 7 of them, of which 5 are currently, in the red. And so if we come to our charts, I've linked my watch list, so here, to my chart. And if I click on Apple, what we've done is we've put on our chart, and I'm just going to compress the time frame. I've put on my chart an indication of when we placed the trade. So we placed the trade Friday, and today it's pulling back. But are we still above our short strike? So with a short put vertical, we're selling a put and then buying a put below it to define our risk. And we'll ultimately have a successful trade as long as it stays above the short strike. So are we still okay? Yeah, like even if we're down a bit today, we're still above that strike. So no need to be calling the caterers to host a pity party because you're now in the trades gone wrong group. And again, here we placed this trade back on the 25th. Actually, that was probably the 24th. Yeah. And it's continued to go sideways. And so what's the nice thing about this trade? it's kind of forgiving that if something decides to lollygag about and go sideways for a while, we still have a successful trade. If it goes up, like ideally, we'd like it to go up and go up quickly and get out of the trade quickly. And the faster it goes up and the more dramatically it goes up, the more the value of this spread goes down, which is what we want. We wanted to sell it and get paid a lot and then buy it back when it's worth a little. And if it goes sideways, we have a profitable trade. We put this on, we could even be a little bit, I want to say wrong, or it could even pull back a little bit, and we're still good to go as long as it stays above 255. So we still have $6 worth of wiggle room. And I know for you guys that trade short put verticals all the time, you're going, yeah, we know that, like move on. But for some people, this is a new strategy, and this is a webcast, so I'm covering it. And here we put this one on here. Today it's dropping a bit, so we'll want to follow that, but it's still above here, which we would look at as a support level, right? So we're still good to go on that. JP Morgan. Well, this one came down to the 30-day moving average, but that 30-day moving average has been acting as a support level since June. It still has like 19 days to get back above that 360 level. And if we look at this in an average day, ATR means it's average true range. So it shows us how much this stock has moved in an average day over the last 14 days. That's what the ATR, the 14 means. And this is at 5 and change. So it's at 355. It just has to go above 360 and we're good to go. It could do that in a day. So are we throwing in the towel on this one? Yeah, no. Yeah, so somebody's asking about how to get the chart set up. And I'll show you a quick video I did on how to set your chart up to look like my chart. And here's Coke. We placed it on Friday. It's pulling back today, but still holding. Meta, still looking good. Microsoft. Now, Microsoft, we got out of on Friday. And so this one, we sold our short put vertical on this day, on the 24th, and it hit our target. So with our example trading plan, we put in an order and say, hey, when we've got 80% of our max gain, we want to get out. And so that one we're now out of. And how did we do? Well, if we come to the monitor tab and come to account statement and we look at Microsoft, you can see we bought the first one for 140. We bought it back for 27. Or if it was this one, we bought it back for 28. Like that was 80% of our max gain. And so how much did we make on it? If we want it, we'll just do the math on one of these. So let's say it's this one and this one. Let me change my color to make it a little more dramatic. So if I take 140 minus 28, we made $112 on that trade, or $1.12 a share. And so you may say, well, that may not have me drinking something out of a coconut in Tahiti. No, but it still buys a lot of groceries. And how much were we risking? Well, we were risking $5, the difference between the strikes, minus the $1.40. So we were risking 360 to make that what turned out to be 112. And so if I divide that, what was my return on risk? It was 31%. And that's, in that kind of typical range for a vertical. So that was our return on risk. We call that a base hit. And are we happy with that? Absolutely. We aren't going for home runs when we sell a short put vertical. Okay. So, we're just looking, but, and you may say, well, that's kind of boring. Well, bore me all the way to the bank. What's the downside on these is that we were risking $360. So if we have one trade where we take a max loss, it can wipe out several profitable trades. And so that's why we looked at these today, because it's important to manage our risk. We don't want to take a max risk if we can avoid it, but we position size so that if we do take a max risk, we aren't blowing up our account. But we can now take that off our list. So and Visa is our last one. And we're still clicking along. I think with Visa, we're profitable. But when we look at our activities and positions, if we look at this, or here we are here, if we look at this, so Meta, we're up 56%. If we were up 76% and this was down by 250, we might say, hey, we're close to our max gain. And it could start pulling back, and we'd hate to be like this close to our max gain and then end up turning it into a loss. And so this is one of the things that I look at. If we're close to our target and this number is especially looking like a small pullback, it may be setting up a hanging man or, a shooting star or some type of pattern that is saying, we could have a bull flag setting up, and we may as well get out with close to the profit we were looking for, and then we could place another trade when that pullback is complete. Now, the other one is our long call verticals. And our deal with the long call verticals is that if we're up 50%, we put a target in to exit the trade when we're up 50%. Now, we only have one of these in the green. Sorry, I need to have a drink. And the other thing that is part of our rule base is that if we're down 50%, we get out. And again, if we're looking at these, if we look at my long call verticals, if we come and we look at Zoom and USB, which are the two that are struggling, this one's down again today, not looking so hot. And USB is actually looking like it's maybe breaking this support level. So it's looking even worse. And so how do we exit these positions? We're going to come back to our monitor tab. We're going to come to our working orders. And I have these organized alphabetically. We're going to come down to USB, say we wanted to buy it back for 211. It's only worth 65 cents. Well, you know what? Sometimes that's the way it goes. We're following our rules or our trading plan. And so we're going to exit that. And then we're going to come up to Zoom and we're going to do the same thing. So Zoom, it was Zoom, wasn't it? Oh, we wanted to get out at, what's that market? Okay, so we're going to just cancel that order. So this is the other way we can do it, is to just cancel it. And then we're going to come back to Zoom. We're going to right click. Oops. We're going to right click on this order and create a closing order to sell what we bought. And we paid $250. We've lost about we're down just over 50%, but we could lose, $250 more. So sometimes admitting when your trade has not gone according to plan is the best thing you can do. And then if you want to do a post-mortem, which I do recommend, if you look back and you say, well, this is when I placed the trade, was that a legit entry? And it was. It just is one of those trades that didn't work out. And if we come back to USB and say, did that look like a legit entry, or was I missing something? So it's important, I think, especially to look at the losing trades. So somebody's asking the question, where can I find the trading plans? And so let me bring this over. So if you haven't subscribe to the Trader Talks channel. So here's the one I did a couple of weeks ago, Steps to Making Trade Management Easier. It's under the Managing an Options Portfolio playlist. And I will post a link to that in the show notes. Okay. So the trading plans I have in the trade management mini session folder. So you're going to want to subscribe to this. It's free. And these trade management mini sessions, we've organized these. I'd say I've organized them, but there are people behind the scenes that do a really great job on this. And the ones in blue are the example trading plans. So here's the example trading plan for short put verticals. Here's the one for long call verticals. Okay. Yeah. And I keep trying to add to these as I have time, but we have a pretty skinny team these days. So I'll try and add another one next week. This week I'm taking a little time off. I will confess. So there we go. Okay, so let's play some new example trades now. That's more trade management than we typically do. And you can see here, we have $20,000 available for trading. We have an account value currently of 30,000. So 2/3 of our account is sitting in cash. And we're not going to trade that dramatically, change that dramatically today. Why is that? Because we're going to look at short put verticals. So when we look at AMD, for example, it's up 117%. So it's hard to characterize that as anything other than bullish. That trade is now gone. So whoops, I need to get rid of that. But it's been kind of going sideways, hasn't it? And so with this one, I'm just going to. So it's been going sideways and it's come down to this support level around the 450-ish level and looks like it's bouncing. Now, we may want to wait. Now, this morning, this was more of a bullish engulfing pattern and it's pulled back a bit. But the way I look at support levels, and it doesn't always work out because nothing works out 100% of the time, but the more times something comes down and hits a support level. So, and on this one, it came and hit it here and here, and then it came down into this support neighborhood again, came down, spent one day below, and then bounced straight back up, came down again, and it's now in the neighborhood. I almost look at it as, think Odyssey, where you have these warriors coming to guard the moat. And it isn't to say that this will hold. Now, technically speaking, and I teach trading a smaller, getting started with technical analysis Tuesdays, we may want to wait, given this current candle pattern, for a close above the high of the low day. But, and so today would be a more aggressive entry, but we could say, well, if I think it's going to stay, above from a technical analysis perspective, my expectation is that it will stay above 450. Could we come out and sell the 450 strike and then buy something below that? And our guideline, our trading plan says, does it trade more than 1 million shares a day? Check. Does it trade at least 20 times the number of contracts we're going to trade? Check. Does this have a tight bid-ask spread? Check. And typically we want to be in that 20 to 50-day range, but with a little boost in volatility, the shorter the time frame, the quicker the time decay. So could we get enough premium for this, the juice to be worth the squeeze? And if we look at this and we say, well, on a 250 wide spread, we could get 72 cents. Well, how much are we risking? Well, we're risking 250, which is the spread here. We're risking 250 minus 82 cents. So like my spidey sense, and I'm no mathematical genius, but let's just call this 80 divided by, what would it be? 160? If it's 80, 170 divided by 170. That's a 47% potential return, and we want to get at least 20. Now, our rule of thumb is that we want to get at least 1% for every day we're in the trade, but if we're under 20 days, we still want to get at least 20%. So this is comfortably over that. And if we're risking $1.70, if we did 3 of these, we'd probably be around that we'd be at 534. So if we're saying, okay, we're okay with that, risking $534, we're going to take our single order, turn it into a first trigger sequence, right click, and we want to buy it back when we've got about 80% of our max gain. So let's make that 15 cents. So it's saying the most we can make on this is 231. Well, there's our goal for the week. Yeah. And how much could we lose? 519. So if we're okay with that, short put vertical. Now we're going to bring up our short put vertical list. Oh, sorry, that's under my short put verticals. And we're going to add AMD to that. So that if we want to just quickly click through all our short vertical positions, we can do that. And I won't take the time to update the chart for everyone, but if we're zoning in here, we can say we place the trade this day, and then we can repurpose this line and say, we want it to stay above 450. So it's a short put vertical, 450, 447.50, September 18th. So now as soon as we look at the chart, we know what we're aiming for, right? Yeah, so, Dwight Wilkes is saying, this looks like a downward trend to me. So I'm not touching that. And I get that. So one of the things I used to do when I was a client, if I disagreed, and like this is the art of technical analysis, is that we can see different things here, is that I would put the trade in, and then in the notes, I would say, just following along, I wouldn't have placed this trade. But now I'm at least following along, and I'm practicing the placing of the trade and all that kind of stuff. Okay. So let's come and look at NVIDIA. Now, another tech stock, like, is she daft? But these guys just had the most extraordinary earnings announcement. Absolutely crazy. And I was listening to Liz Ann Saunders, and one of the things she pointed out, and I'm looking at my notes, that the NVIDIA represented 18% of the expected earnings for the entire S&P 500. This is one company, an index with 500 stocks, they represented, and they outperformed. So we had this big gap to the upside. Then Friday it pulled back. This candle pattern, if you're new to technical analysis, you can go to that same trade management mini sessions and look at the bullish Harami. There's the first group is all short videos on different candlestick patterns. And this one does not require confirmation. This is considered to be bullish at a potential support level. And so if we looked at this and we said, geez, like, could we possibly, it's trading at 219. I wonder with the little boost in volatility, could we come back down here to around the 210 and get enough premium? Like, that gives it a lot of wiggle room for a $200 stock. So again, does it trade more than 1 million shares a day? Check. If I look at this 210, is the bid-ask spread less than 10%? 14 cents on a 240? Yep. Do we have lots of volume? Yep. Some will, put as part of their plan, they're looking for a delta between 20 and 40. What this 210 strike is telling us is currently, this is probability of it being in the money. It's saying we have a 26% chance of it being in the money at expiration. that means we've got a 74% chance that this thing's going to expire worthless. So that's a 74% chance of it being successful by expiration. So if we said, well, the next thing is, are we being paid enough? So if we get 53 cents, we're risking $1.97, right? 250 minus 53 divided by $1.97. That's still almost 27%. And you might say, well, why aren't you doing a $5 wide spread? Because then you'd cut your transaction fees in half. Well, if I'm doubling my risk, I'd like to double my credit. So I'd like to see $1.06. And if I go to 205, am I going to get $1.06? No, I'm only going to get 94. So I'm getting $12 less. And I'm paying in transaction fees $1.30 to get in and $1.30 more to get out if I do 2 contracts. Now, it's not quite apples to apples because the probability of it going through the 205 strike is lower than of the probability of it going through the 207. But the number I'm really making my decision on is the 210. Okay, so does that make sense? And so if I said, well, I'm willing to pay the extra transaction fees because, if all goes according to plan, I'll make more money. Now, one of the differences between paper money and a live account is that I don't think transaction fees are charged to paper money. So, that's one of the differences. But we're going to go ahead and put this in. We're risking $2 a share basically. So we're only going to do 2 of these because we might be willing to risk 530, but we're not risking 600. And we're going to put an order in to buy this back at 10 cents. Now, if you're bullish on this stock and you're looking at the chart and you're saying, well, why not do a long call vertical? I'm risking, like I can make a higher return on risk on this, but the tech sector, has had its moments of late. So we're going to add NVIDIA to our list. So if I come and I look at short sector indices and we look at the tech sector, it's been kind of going sideways, right? And so if we're saying, well, the NASDAQ seems to be kind of in this consolidating period, this sector has been kind of going sideways. So if I want to trade more conservatively, I'm selling the 210 here. So we're placing this on this day. If we're feeling really bullish, we could do a long call vertical, but it's more directional. By placing this trade, we're saying, hey, if the market and this sector continues to kind of go a whole lot of nowhere and NVIDIA gets sucked into that vortex, we're okay with that because as long as it stays above 210, we should be good to go. And if it does move up, as we're anticipating it will, then maybe we're not in this trade for 19 days. Maybe we're only in it for 6 or 7, if it has a nice move to the upside. Okay. Okay. Let's look at Workday. So when we look at Workday, like here was a stock that was consolidating, right? We had a double bottom pattern here. It broke out, came back to retest, had this big move to the upside. And then, often we'll see like the halfway point on a candle can act as a resistance level, and it seems to be consolidating here. We just had earnings. They were expecting earnings of $1.26 a share, and it came out at 257. And so, why would somebody consider placing a trade on a day when the stock is pulling back a bit? And, it's down 3% today, because if we believe this will hold, if we sell our vertical closer to support, we'll get more for it. And so you may want to come out here and say, well, I think it was Reagan who said trust but verify when he talked about negotiating with Russia. But how are analysts looking at this? Well, Jefferies just raised their price to 220. That's up here. And these guys may be wrong. Barclays to 224, Citigroup 201, Stifel to 160. It's like they don't seem to be kind of, with the rest of the group. Bernstein to 238, 230, 215. And so if we said, could we sell the 185? It's trading at 198. We might not be able to get enough premium. So let's come and look at that. So if we look at this 185, it's trading over 1 million shares a day, but 285 to 330, we don't want this bid-ask spread to be more than 30 cents, and it's 45. And so one of our rules is we want the bid-ask spread to be less than 10%. So even though we have the volume, we don't have a tight enough bid-ask spread. And we look at the 182.50, 135 and 350, you could drive a truck through that. So even though we may like the look on the chart, we may say technically, I think there's an opportunity there. Bid-ask spread isn't looking so good. And the same thing, if we look at FCX. So FCX could be setting up a bull flag here, but we have 2 small down days and 2 bigger down days. So here we may say, we're just going to keep watching this. And here we want to see that close above the high of the low day because, we want to be sure that this pullback is complete because I don't see a support level where, like in our first example, it had hit that support level 5, 6, 7, 8 times. We're looking for it to establish a new support level. And our expectation is that this might be it, but this candlestick isn't telling us that it is treating this as a support yet. Okay. And so sometimes we just have to look at things and walk away. And same thing with GM. Now, GM, when I came and I looked at the bid-ask strikes, bid-ask spreads, 28, this is 11 cents. So it's maybe acceptable. But this is one of the things that we want to consider. Okay. So guys, that's a wrap for today. And I know that on days like today, sometimes the temptation is just to close your laptop and go do something else. And that's okay. To say, I'm going to wait until the market finishes its consolidation or finishes doing what it's going to do, and then I'll come back and have a look. So sometimes the best trade is no trade at all, but you want to make an informed decision on that. And then sometimes there are opportunities there, and you can say, like, I can trade this in a way that is going to, perhaps give me the type of return I'm looking for and help me meet my goals. So we had 2 trades that we closed out today as part of our trade management. So we had a trade on USB and a trade on Zoom. And then we placed a new trade on AMD. We did a new trade on NVIDIA. And did we do the trade on Workday? Let me just see. No, we didn't. We decided not to place that. So we did 2 short vertical trades. I showed you where to find example trading plans. Also, I'll put a link in the show notes to the class I did in the managing an option portfolio on just how to do your trade management. And I thank you for joining me. Thank Scott for being in the chat today. Please hit the like button. Don't forget to subscribe to the channel. By hitting like, you're not just showing Scott and I that you thought the content was valuable, but it moves things up in the YouTube algorithm so more people can find this content. So it could be your opportunity to do a favor for a random stranger whom you may never meet. by hitting like. And then last but not least, go over to LinkedIn, find us there, and find us on X. Know that scammers are really upping their game. So they've done this email thing, saying that they are me. If you get an email from me, it is not me. It is, a scammer version of me. Know that I will never reach out to you on X, on LinkedIn, on any platform, and encourage you to go over to Telegram or Facebook Messenger or anything like that. We'll never offer you a crypto or a Bitcoin deal or private education for a fee. These are all scammers. So be safe, my friends. Up next, Mr. James Boyd. You'll want to stay tuned for that. Take care, everyone. Bye for now.